Good afternoon, everyone, and welcome to Stock Market Today. Ali Quorum, Ned Carson here with a breakdown of the action today and for what has been a pretty terrible, awful week, Ed.
Yeah, there really was nothing good to say about it. We'll say plenty though, but we'll take a look at a few stocks that are relatively holding up well. Apple, which has earnings this week, UnitedHealth, and JB Hunt.
Relative, a key word. I see what you did there, Ed. So we'll talk about that. And first, let's take a look at the major indexes. Here is the NASDAQ Composite closing down 2.7% on Friday. We had the S&P 500 down 1.9%. The Russell 2000 down about 1.5%. The Dow down about 1.3%. So this market correction really seems to be breaking wide open here, Ed, and the NASDAQ, which has been the weakest, continuing to deteriorate.
Yeah, and we're seeing this pattern of, like, I think the NASDAQ was down 7.6% this week. All the indexes closed at session lows essentially each day. You know, there were some rebound attempts, but they lasted a few minutes, a few hours at most. It was all pretty sad is what it was, you know, like kind of thing. There really wasn't any fight. You know, it was a pretty dispiriting week in that regard, and a little tiny blips. You can hardly see some of the rebounds, and they didn't last long to close like that. Really, you know, the bears mauled everybody. Obviously, the NASDAQ got hard hit, small caps got hard hit, but really didn't leave many sectors unscathed. The NASDAQ, you see, just blew through the 200-day line, blew through October lows. Really not a whole lot, you know, that you would see as obvious support levels at this time. You know, maybe the spring lows from last year, but that's got a ways to go there. And but definitely saw a lot of that weakness throughout the market. And it's just, yeah, there's just no reason to get excited. Even if we do rebound on Monday or Tuesday, say, that doesn't mean we should get excited.
Right, because at the open, or even I guess late yesterday, signals of being oversold, but that doesn't guarantee you at all that there's going to be a sustained bounce. So at this point, it seems like having that kind of mindset would be falling into a trap. You just want to be on the sidelines.
Yeah, I mean, you can try to guess the market bottom. I mean, if you buy into every little bounce, you'll get the market bottom. But the problem is you'll also get a bunch of these other ones that just roll over. So how many, you know, that's not a winning strategy.
That's exactly right. So yeah, here's a look at the 5-minute chart. We did see a little reversal and a bit of a rally, but that all in all was short-lived. So those who did want to play the bounce, setting a stop and getting out, you know, doing a test buy, not putting too much money at risk, but making sure you get out. And that was a great point that you were making this morning on IBD Live. Even if you are going to try to put some money to work in this market environment, you have to be willing to sell, because we don't know how much further down we have to go at this point.
Yeah, and you wouldn't have thought we'd have such a bad week, but here we are.
Yeah, that's exactly right. Here we are. And now let's take a look at the S&P 500 slicing below its 200-day line today, and below that level for the first time in quite a while. Here's a look at the weekly chart. So this black line is the 40-week line, and it's been quite a while since the S&P has been below it.
Yeah, it has been a long time. And this was the index that had been doing better than any other. I mean, better than the NASDAQ, better than the Dow, better than Russell. And you can see in just a matter of days, a market that wasn't looking too bad. I mean, even, you know, it really fell apart. You know, the tech's obviously weak, but the financials as well. Even energy wasn't doing that well. It's just everything's bad. And now, yeah, there's a few, you know, maybe the October lows and that kind of thing. But on, you know, like, there's really not a whole lot. I mean, there's, you know, maybe the market puts up a fight a little bit, but again, you know, who knows? It hasn't done so right now. And I just think you know, let somebody else get in the way of that elephant. You know, get in front of that. Let the big funds try to stop the selling at the point if they want to. Right now they're selling. So wait for that to turn around.
Yes. And also, so at this point, I mean, it's hard to be positive about the market, but what we can look to is that there will eventually at some point be a new rally, and that means new buying opportunities. I mean, look at all the destruction that happened in early 2020. We, after that, saw a lot of really outstanding moves from a lot of different companies, and some that attributed to multi-year gains on, leaderboard, for example, Nvidia, Microsoft, so and more. There will be those opportunities out of the ashes of this destruction at some point, but we have to wait for those positive signs, as you were saying, instead of just trying to guess the bottom.
And we don't know what will be the leaders yet. I mean, we can look around and see if the old leaders, like some of those coronavirus crash winners like Peloton and Zoom, they may never come back, and others may take a long time to come back. So you just have to wait and see what develops during this thing. So just be flexible, keep an open mind, and have to be patient right now.
Right. And yeah, I know there's so many on the team that say, hey, I love a correction because I can move out, be on the sideline, be in cash, and then be ready to strike when those opportunities do arise. And you are in a good mental state, your mental capital is ready and prepared as well. But let's also just take a quick look at the Dow and the Russell here. So the Dow closing below its 200-day line on Thursday, continuing lower today, now headed towards the 34,000 level and its lows from late last year. And we also want to take a look at small caps looking pretty brutal. So yeah, by far small caps have just been the weakest for quite a while, and almost free falling. It feels like at this point, I mean, down 8% for the week and just plunging to its lowest levels in many, many months.
Yeah, it couldn't rise when the market was in a strong uptrend last year. And now with the market down, it is just terrible situation right now.
And growth stocks are getting absolutely hammered. Here's a look at the IBD 50, down over 11% for the week. So it's not a good time to be holding growth stocks.
No, I mean, growth have been absolutely crushed. Anything highly valued has been really hard hit. There's a lot of charts that look like this in the growth space, and that's just what it's going to, this will come back at some point. Growth will come back, but it's not today.
And taking a look at the 10-year Treasury yield, that is what has really been sort of the reason behind this market turmoil that we're seeing lately. So where do we stand after another week?
Yeah, I mean, what's interesting is that the 10-year yield, it finally really broke through to a 2-year high, and even though it came back down off of those levels and sort of came back into the base, as it were, almost, that long consolidation, it didn't provide any relief for the stock market. It's almost like at some point the market has just had it, and it takes a while. Something similar happened back in last year when the bond yield surged up. At this point, it eventually came off, and the market fell off. But even though the yield came down sharply, it took several months before the NASDAQ really took off again. And next week we got the Fed meeting, so that there's going to be a lot of uncertainty about that, along with earnings, just enormous earnings from the likes of Apple and such. So provide a lot of uncertainty. It'll provide a catalyst for a rebound, but it may go the other way. It could go both ways during the week with all these things. So definitely the 10-year Treasury yield, it's still very high. Market's very sensitive to that. And so it's going to be an important week just to see what happens with yields and Fed policy.
That's exactly right. And you mentioned highly valued growth and the more speculative, high PE growth names in the likes of the ARK Innovation ETF, ARKK, getting slammed this week as well, also down about 11%. And Ed, I mean, looks like we're coming down pretty far here. Let's see, back to, June 2020 levels. That's erasing a huge gain.
Yeah, it really is. And again, that just shows you how some of these highly valued growth stocks, they've just come under pressure. And that's just what it is. It's not like they're picking the only stocks that have come down. I mean, we've seen it with all these other things. that's just not an area of the market that is working at all right now.
Okay, moving on. Let's take a look at how some different groups are doing. Here's a look at XME. Just when we thought metals and mining names were going to be the group that money was really rotating into, getting hit hard this week. Ed, Friday down about 5%. For the week, down 10%. So maybe a little bit of a head fake here with, just when you thought that this group was really going to take center stage, not so fast.
Yeah, well, it was pretty fast on the way down.
Well,
but yeah, I mean, it's like, but yeah, and that's the issue is that, yeah, you look for these stocks, and one reason is that you're looking, but you're going to have to constantly change what is working, because stocks and sectors that are holding up will then not, and there may be some others that start looking relatively better. But this happened a bunch of times. So yeah, not looking good at all. A bunch of steel makers come out next week. Freeport McMoran, which is holding up better than a lot of the names, but not a group that weathered the storm this week.
Yeah, and keeping an eye on and staying on top of sector rotation is hard enough, even in good market conditions.
Yeah.
At least it's what last year showed us. So even tougher right now. And financials, another tough spot this week, along with the energy sector. This was an area that we were seeing, signs of an early entry right to kick off 2022, but now round tripping that gain and then some, down over 2% on Friday and 6.5% for the week. So financials, another area that were looking great to kick off the year, and now that's not the case.
Yields reverse lower, even worse. The long end yields fell more than the short end, so the yields are compressing. Meanwhile, there's a lot of earnings reports for a week. So yeah, what looked great, what looked like another great sector, now not. And it's just, yeah, in a bad market, the stocks and sectors, the last survivors are usually just the last survivors to go, not the ones who actually hold out.
Well, is that going to be the case with the energy sector? That's been definitely the standout group so far this year, but not immune to pulling back, with the market down 2% on Friday. For the week, down about 3.2%. So still holding up much better than other areas of the market, but again, not immune.
Not immune, and it declined this week. And yeah, so I mean, if you own these stocks, some of these stocks that look like this, and you got them on the things, they're looking fine. A lot of them, some aren't, but a lot of them are looking really good. Yeah, it's just a tricky. Even the good groups and sectors had a tough time this week.
And now let's take a look at Apple, because we have earnings coming up next week. And it triggered a sell signal this week, but on a relative basis, holding up better than most. So let's take a look at the weekly chart here, down over 6% for the week. Volume was lighter than average, but it finished about 4% below the 10-week line. So a pretty definitive sell signal.
Certainly, yeah. If you bought it fairly recently, that was a pretty good sell signal, especially there. And, this correction, why do you putting the risk? The earnings are coming up this week. It's like there's a lot of reasons to be nervous. On the other hand, a 6% drop doesn't really affect you on the relative strength. Look at that line. It's basically right at highs. And that's the kind of thing to tell you is that's how weak things are. When a stock can plunge 6%, pretty decisive sell signal. And it's like on our RS line is right at highs. So we'll see how this goes. Now, if it holds like here, the earnings do well and all this might be a leader coming out of the correction whenever that happens, but we don't know. Maybe this falls apart like the financials, like the miners did. We just don't know. But this is important, and also not just for Apple, but for the ecosystem behind it, all those stocks behind it.
Yeah, so true. And as you always like to say, Ed, a relative winner can still be an absolute loser. So
it's definitely true here.
So keep that in your back pocket. All right, let's take a look at UNH as well, trying to hold around its 10-week line above its lows from the prior 2 weeks, down just 1.6% for the week. And yeah, so it's trying to hold in this little range that it's been trading in the last couple of weeks after a pretty big move sent it down to its 50-day.
Yeah, and one nice thing is that one reason why it fell that much is because rival Humana had some bad news about Medicare Advantage. But UnitedHealth came out, had strong earnings, and said, "Yeah, Medicare Advantage is fine, no problem there." So that stock held up. Did okay on earnings day. Didn't fall that much, and you can see how the RS line shot up this week, even though the stock declined a little bit. Again, I don't know where this will go. It doesn't, right now, I don't think you really want to be looking for the prettiest bases that are all ready to go. You're just looking for something to just hold up, in some vague fashion, something that when we go from the market pushing down to going up, this might be a stock that, can set up reasonably well. Pretty good numbers. They're going to have decent growth in the next couple of years, supposedly. So definitely one I think people should be watching.
Yeah. And so speaking of, if we're not seeing full-fledged bases being formed, the couple of quick things that you can look at on a chart to put stocks on your watch list would be that relative strength line, as you were saying, Ed, and stocks that are holding at or near their 50-day, 10-week line.
Yeah, and in some cases, maybe even the 200-day line at some point, because we're getting to that point with all the major indexes below their 200-day lines. It may be that the 200-day line is what you have to start looking for support, especially if this correction goes on any longer.
Mm-hmm. Very good point there. And let's take a look at JB Hunt and the transportation trucking group. Talk about relative strength. JB Hunt has that right now in spades, it seems.
Yeah, it's pretty crazy. And it's like sort of up and down, hasn't really gone anywhere. But yeah, not going anywhere is really a good place to be. As we talked about it, I had strong earnings. It's held the 50-day line. So that's something that not many stocks are doing, not even many of its trucking rivals. That's a concern. It's like all the other ones are falling apart. This one might have actually formed a 3 weeks tight. I wasn't sure as we were closing in. So that's would be pretty crazy. No, well, technically not quite, because you have to be within 1.5%, but it's been trading awfully.
1.54%. So
yes. Yeah. So you can't round down.
Yeah.
But it's been trading fairly tightly. I mean, all in all, despite some up and downs on daily moves, pretty tightly overall for the last several weeks, actually last couple of months. So that's pretty positive action. Probably the earnings growth will slow as comparisons start to get tougher. Now that's going to be going up against 40% year-over-year changes. But there's a lot of reasons to like this. You see, so there's still a number of transportation shipping type companies, whether it's here or in rail or in ocean, that relatively are looking pretty good. So you probably want to have some of these on your radar as well.
Yeah, and that relative strength line looks very healthy, and who knows if it can continue to hold up. Perhaps in another couple of weeks, it will have a base pattern that shows up. We'll have to see. But just because you put a stock on your watch list now doesn't mean that it should remain on your watch list if it does start showing signs of weakness.
Yeah, you sort of think about like all those first round draft picks in the NFL or basketball. A lot of them never really do anything. You're sort of like, okay, they look promising now on draft day, and you're not drafting them yet, but it's like, that kind of thing. But yeah, you just have to see and wait until they actually, conditions when conditions are good. Are these the ones that are actually going to be there? Man, maybe not. I don't know, but keep on working on those lists.
All right. Well, we'll have to see. So, Ed, as investors prepare for another week ahead, it's going to be a big earnings week. We've got the Fed news as a potential catalyst as well. So what should investors be doing besides either trying to meditate or go get a drink after a week like this week?
Yeah, look, just like hopefully if you're not too much in the market, you can, it's not that big deal. You can preserve that capital, preserve your mental capital. Usually these couple of weeks of earnings are really frantic, but now it's sort of like, well, it's, if you're not that invested, it's not that big deal. You want to see what shakes out, what is doing well, and just work on those watch lists. Maybe things turn around. It's not going to be till late next week or the week after that or the month after that before we have a follow through day. We're not even on day one yet. So you've got time to be working on that. And there's still time. If you didn't have time during the holiday season, look back at some past trades, maybe even just the recent trades. It's like that could be, if nothing else, might remind you, this is why you don't want to start trading in a correction or when the market's in a downtrend. Do a lot of prep and just be ready for the next uptrend, but it's not going to happen on Monday.
Yeah. Well, it only takes 4 days, so we'll see, Ed. But yeah, we don't have a crystal ball, of course, so that's why we're not going to try to predict. But we will just react in real time to the information that the market is giving us, as always, and be flexible. So thank you, Ed, and thanks everyone for tuning in. We will be back next week with more. So we'll see you then, and we hope you have a great weekend.